All right, I made a mistake with Crocs today, and I'm going to go over it. So I mentioned before that I have a mid-sized position in Crocs, and you can check out the prior videos about why I think it's a great company and it's undervalued. And before, I used to trade in and out of it, use it as a trading sardine, and buy it when it was in the 90s and sell it when it was in the hundreds. And then I made it a nice medium-sized position when it got to around $80. And during that time, I was selling lots of puts at 80, 78, things like that, and just keeping the profits from that and using that to lower my cost basis in Crocs. However, it's gone up a lot recently. It's up over 100. So what did I do with my position? I kept most of it because it has not been a year, and so if I sold it, although I'm up about 25% as of today, if I sold it, I would have to pay short-term capital gains. So I sold a lot of the shares that were in my retirement accounts for a quick bump, and I may buy them back later because in my retirement accounts, obviously, I don't pay any tax. And in my taxable accounts, I was thinking about what to do, and what I should have done is, because I like it and I don't think it's going to go up much further, I was planning to sell some calls on it. So if I sell some covered calls on it, I own the shares, and I had intended to sell calls on it. It's at 100 today, calls at 105, and I was getting $5 for each call. So if the price of Crocs went up but less than $111, I would still make money. And if the stock kept going up, I would lock in that price. So I'd have to deliver shares of Crocs that I own, but the price is now 100, and with the premium, uh, my break even would be 111. So if it went up more than that, I would give them my shares and walk away. And if it continued to go down, then I get to keep my shares and get to keep the premium. What was the mistake I made? So there's four things: you can buy a call, sell a call, you can buy a put or sell a put. And I intended to sell calls, covered calls, because I own the shares, but I accidentally bought calls. So it was at the end of the day, and too late to reverse it. But I'll try to fix that on Monday. So I think I mentioned before we were having a baby, and about 3 weeks ago he was delivered. So I'm kind of sleep deprived, and my math isn't as mathy as it is on 8 hours of sleep. So sometimes I make mistakes, but it's not a big deal. I'll see if I can correct it on Monday. Haven't had time to post because I haven't had time to sleep. But I do have a video coming out very soon with Progressive Planet, where I interviewed the CEO. It's a great one. Keep an eye out for that. And I also have updates on Venture Global and a couple of other things. So stay tuned. And if you have any questions on Crocs, leave it in the comments. I'm also going to try to do some videos ASAP on Venture Global and Coupang. So Venture Global, when I was buying it and I was telling people what I saw and why I thought it was underpriced, it was below $10. I think I was $9, $8 I was buying. And then it got as low as 7 or something, and I said this is a steal, and people disagreed with me in the comments. Um, as of a couple of weeks ago, it went up to like 15, and now that things are settling down in the Gulf, it's coming down again to 10 or 12. So it's been quite a ride, and I did really well on the common, and I sold a little too early. I think I sold around 12, and it went up to like 15 or 16. But I do have some options on that, and I'll go over that in a separate video on its own. But that's the update on Crocs. So Crocs earnings is coming out soon, and we'll keep a look, see what's happening with that. But they had been buying back shares, and buying back shares at 78, 80. If they can keep doing that, that's very accretive to shareholders. And Hey Dude is still not great, but it was a terrible acquisition. But the core Crocs brand is very profitable and very high margins. And there was some concern about pricing pressure, because if oil is going up and you're making injection molded plastic, the price of that input could go up. And that is a concern, but I think it's more of a concern for the people making knockoffs, because if you're making $25 to $200 Crocs, and you're people trying to knock you off for making them for 15, if the price of the input goes up, there's less meat on the bone for them to try to undercut you. So I think it'll affect everyone because they're all paying for that input the same price. But Crocs, because they have much higher margin, I think will do better than people trying to do the knockoffs. But anyway, that's my thought on that. Let me know what you think in the comments. So just to recap, I have a mid-sized position. I do have some puts that I sold 80, 77, 75 that are expiring within the next couple of months, and I'll probably get to keep all that premium. And I do plan on Monday to undo that mistake I made. And because I have lots of shares, I will try to sell some calls at, let's say, 105 or 110, because if I'm willing to sell it today at 100 and I can sell the calls, it's like getting extra premium. And then if the price goes down, the amount that I got for premium, that kind of reduces my cost basis, which currently is around 80, not counting the puts I sold. So, it would reduce it to, let's say, 75, which is great. But anyway, that's my thoughts on that. Let me know what you think in the comments. Like and subscribe so you'll see future updates like this. And there's a Buy Me a Coffee link if you want to support the channel, but don't feel like you have to. Have a great day, everyone.